Hey everybody, this is Sime, your crypto CPA from the Lone Star State here at Akif CPA and also at Chainblock Financial. Today I want to talk to you about a very important topic. And a lot of us out there that are in the crypto land that have been trading crypto for a while, we were all under the impression that, you know, the IRS will never catch our crypto trades. I have nothing to report. Just because I haven't received a letter, they don't know anything. Well, ladies and gentlemen, this is far from the truth. IRS knows a lot more than you think. And when they come, they know very well that it's not just 1 year that you're actually at fault for. It's multiple years. And they know that pattern repeats. When someone basically evades taxes, that pattern repeats again and again. And they know that if you've done it in 1 year, you've done it in prior years. And you will probably likely do it again. And they will flag you and your account. So what I want to do is I want to take that boogeyman, the amendments and how difficult they are, and I want to take that out of the picture because we get a lot of clients that have not even ticked the box that they're trading virtual or digital assets right on the top of the front of their 1040, and also companies, partnerships, C corporations, S corporations that are engaged in cryptocurrencies are not reporting at all. This is complete tax evasion, and there are massive penalties for those. Just recently, not too long ago, you saw the case in Austin where they imprisoned somebody for, I believe, 2 years, and they were trying to send a message. The IRS is using analytical tools right now to watch all the blockchain transactions. Not all of them, obviously, but most of them. Now they're getting a good foothold into the world of blockchain. And before they get to you, if I were you, I would go through all my data, all the transactions, make sure I apply prior accounting rules and then the new wallet-based accounting rules, and present the data that will benefit me the most. This is something that you can do. We've been doing this for so many of our clients, and you don't want this cloud hanging over your head. Whether you're having dinners with your family or taking these vacations, you constantly have this cloud of what if they know, or am I gonna now receive a letter, or what will happen now? Every time you're traveling abroad and you're coming back home, when you're passing through the immigration, even though you're a U.S. citizen, a lot of times it's in the back of your mind. You're like, what else do they know about me? And you know very well what that is. So why don't we remove that cloud? Why don't we remove that elephant in the room? Make this easy for you and your family. Enjoy your crypto earnings. Enjoy all of that. But make sure you report. Go backdate, report. You know the statute of limitations and what they are? So when you file a tax return, the statute of limitations typically on a good, honest tax return is 3 years. But if there's an under reporting or over reporting by 25%, then it's 6 years. And if you didn't report at all, if you didn't file your taxes at all in the last few years, it's unlimited, it's forever. So let's use the rules and let's use the tax code that we have at our disposal. Let's go through all the data set, and sure, you were probably engaged in lots of exchanges that have closed their doors to US residents and whatnot, but it doesn't matter. Gather that data set, plug it into a third-party crypto tax software, find a good darn CPA in your home state, in your home city, and I know those are very difficult to find. Last thing you want is for your tax practitioner, your most trusted individual, for them to be winging your crypto trades and crypto data into your tax return. And that would be a big no-no. And then you will have amendments on top of amendments, and you're asking to be flagged. So put let's make 2025 a year that all those worries, let's put them away. Before the end of the year, do the tax loss harvesting and do your tax amendments. And let me show you what that tax amendment form looks like. Whether you're doing it in your TurboTax, or you have a CPA or whoever, basically, I'm going to just do the 1040X. And the 1120s, the S corporations, all the LLCs, the C corporations, they have their own. It's very similar. So basically, let me go through this right now and show you. So this is what that form looks like. Whenever you amend your tax return, you will get this 1040X form, and let me go ahead and take it right here. Here we go. So then you can also see me. This is what that form will look like. You will have this column that will talk about the original amount. Then you have the net change. And obviously, if you have been reporting tax returns that don't have crypto data, these numbers will change. And then you might have a tax due amount. And you would need to report all your crypto trades on Schedule D again. The final form will look the same. You will have a 1040, but then you will have a 1040X that will go with your 1040. And you need to make sure that this is filled out correctly once and for all. And trust me, it's not as bad as it sounds. It's better to get this done and get this done right, so you have a very small tax bill and you've reported everything to the IRS. And again, there are tax strategies. You can use those to lower your tax bill as much as possible. So get with a good crypto CPA and do your 1040Xs. And again, you know, you're still gonna have a full 1040 deck that's gonna go in with the Schedule D, with all the stuff that already went into your original return, and including all the new information. But I would not recommend that you just haphazardly do 1 year's of amendment, because what you need to do now is do this right, and do this right and once for all. And that means gathering all your crypto trades, making sure all of those are in one place, centralized place. Use the pre-2025 accounting rules that are laid out by the Department of Treasury and the IRS, and then use the post-2025 accounting rules. At the same time, figure out how you can mark those things correctly. You know, what the pools are, what the swaps are. A lot of times you go into liquidity pool with one token, and next thing you know, a completely different token is coming out. And last thing you want to do is mark all of that as income, because it's not. Then you're going to end up overpaying your taxes. So I want to just tell you that 1040Xs and the 1040s and 1120X, 11, and then also the 1065, all of those amendments, partnerships, LLCs, your individual returns, they're all easy. But have the courage to get that amendment done. And if it's scaring you a lot, contact us or contact anyone that you know in your home state who's really good with crypto taxes, who knows what they're talking about with all the DeFi projects, all those. Even if you were involved in a rug pull, you still need to report your losses. Otherwise, your tax return is wrong. So just don't think just because you are in a loss position that you have properly filled out your tax return. That is a penalty. So, ladies and gentlemen, I just want to just tell you, this was a heart-to-heart talk. I wanted to give you just advice, and I wanted to tell you that this is not as bad as you think. Today or this year, start, and before the end of this year, do your amendments. At the same time, don't forget, we have the tax loophole in crypto, which is tax loss harvesting, the non-30-day wash sale rule, where you can accumulate those losses and then use them in the future. And that would be amazing for you to not have to pay any tax on your crypto trades or your equities, because you've amassed those losses on the crypto side, or even real estate. Check out my videos that I've put out. Look into the stream section. You'll see lots of videos. Contact us directly, and we'll be more than happy to help you out. And again, this is Saim, your crypto CPA from the Lone Star State here at Akif CPA. Let's take that stress away from you.